In this week's episode of the Stockscores Market Minutes, I'm going to walk you through a trade that one of my students did recently, making him about $150,000. We'll then do my regular weekly market analysis. We will look at the day trade of the week on TENB and go in search of longer term trading opportunities with the Stockscores Market Scan. So this week I got an email from one of my students. His name is Mark, and he told me that he had his best trade ever this past week, or over the past month. He exited this past week, and that trade was on MARA. Now I'll put the email up that he sent me, and you can see that he entered the trade back on November 17th, and it has since netted him just about $150,000. He sold half, and he's still, I think, carrying half, although he might have sold the other half on Friday. And that's a great story, but I want to talk a little bit more about the actual perseverance that went into this trade. Mark's been one of my students for a number of years, and in the beginning, he really struggled with trying to figure out trading and asked me a lot of questions and had perseverance and determination and resilience to stick with this trade. And that is what made it happen. Now, I'll walk through the trade very quickly here. He originally entered on November 17th as a day trade. As you know, we look for action candles, and back on November 17th, it triggered our entry signal back then. Now, sometimes when a stock is a good day trade, we'll end up holding it longer because it materializes on the longer term time frames as well. You can see here on the short term time frame, it closed the day near the high of the day in what's called an ascending triangle pattern. Now, if we then jump to the 13-minute chart for that day, November 17th, you can see that at the time it had broken through this resistance level early in the day, and that volume was really increasing. So that's one of the things we like to look for, is that increasing volume. And it made an action candle on the 13-minute chart as well. So it did it on the 2-minute chart and then on the 13-minute chart. Then we jump to the daily chart for that time. And again, November 17th was this day right here. Look at the strong volume, strong price action, breaking a downward trend line from a rising bottom. That's a pennant pattern, and it indicated that that stock was likely to go up, probably getting up to that 5.25 level where it would find some resistance. So he built a position over a short term, a couple days, I imagine, and held onto that trade for some time. And that's really where the profit really comes from on this trade, because he stuck it out through pullbacks. Now, one of the things you have to understand about stocks that move in upward trends is they don't go straight up. They go up, they pull back. They go up, they pull back. They go up, they pull back. They go up. And what happened on Thursday, this stock made what's called a bursting bubble candle. It traded very abnormal volume, the strongest volume that we can see going back to August, and it closed below its open. That's why it is a red candle. And that's why he sold half of his position. And the other half, I'm not sure if he's out of it yet. He sent me an email on Thursday. He may be out of it now. But what's key about this is he rode out these pullbacks. And pullbacks are fine. They're what recharge buyer interest. We expect the stock to get stuck at resistance and pull back. And it did exactly that. And then it broke through and it pulled back. But it never broke the cycles of rising bottoms. And that's what's key with this trade. Now, eventually, the trade gets so far from its upward trend line, because we're way up here, the upward trend line is here, that distance is very large, and that tells us the stock is moving up on emotion at that point. And when stocks move up on emotion, it's sometimes a good idea to take some profit. The trade, 1 month, one trade, $150,000, emphasizing that trading stocks is simple, but it is not easy. You must trade a proven strategy and have the determination and perseverance to make success happen. Now, what's key, and this is a commonly used cliche in trading, it dates back to the very famous book, Reminiscences of a Stock Operator, written in 1931, I believe, by Edwin Lefebvre. And that is, the profit is in the patience. When you have a winning trade, you have to stick with it. And that's what Mark did on this MARA trade. Focus on strategy rules, not the money. Treat trading like it's a video game. If you can get some emotional detachment to the money, you're going to make better decisions. And finally, if you want to learn how to trade this particular strategy, you can go to the trader training page on Stockscores.com. There's more information there. All right, now let's get into this week's analysis of the US markets. This is the short-term chart, 30-day, 60-minute chart. You can see there we've got rising bottoms. That's a sign that the buyers are in control. And so although the upward trend is getting a little flatter than it had been back in November, it's still an upward trend. And so the buyers are in control and we should remain optimistic. Longer term, same situation. We've got rising bottoms on the chart. That means the buyers are in control. Until these upward trend lines get broken, we should stick with that upward trend. Now, I do feel it's getting a little bit extended. We've come a long way from the COVID crash bottom back in March, but there's no sign of a breakdown yet. So maybe be cautious, but there's no sign of a breakdown. Looking at the NASDAQ 100, you can see on the daily chart, it also has rising bottoms. That means there's optimism. The buyers are in control. This week, we break out to new highs, so the market is in good shape. You'll also see that the Stockscores indicators have been above that critical 60 level for most of the year since basically the spring when the market bounced and reversed. On the Russell 2000, this is really where the strength is. And again, you can see that we've had that crossover above 60 on the green line there. That's our sentiment stock score. And the market broke out and has been rallying ever since in a nice upward sloping channel. And that's where the strength in the market is in the small cap stocks on the US side anyway. And I think it's a retail story. We've had so many retail investors start trading the market again, and they tend to be more emotional. They tend to chase after the smaller cap stocks because they can get more shares for their dollar. They don't have to have as much capital to trade with. And we're really seeing these small cap names being chased by retail investors. Now, that often will end badly, but along the way you can make lots of money. So you may as well enjoy it. Just remember, eventually you have to sell and get out of these things. All right, looking at the Canadian markets, also in an upward trend, and so no real cause for concern. Bullish market on the short term. Now on the longer term on the TSX, I am a little bit worried about this long-term resistance. Talked about that a few weeks in a row now. We are getting close to that. That doesn't mean that the market's going to necessarily go down. It just may stop going up. As markets rally into resistance, they usually get stuck at resistance. So we should expect that to happen. Looking at the TSX Venture, we had a little bit of strength in gold this week, and that helped the TSX Venture lift to new highs for the year. You can see also volume is starting to increase a bit. So again, that retail trader, that short-term, less capital in their accounts type trader, they're focusing on the smaller price stocks because that's where they get good return for their money, and that's the sector of the market that's doing best right now. Commodities, gold, as I said, gold had a little bit of strength this week, and the reason why is it pulled back to its upward trend line and it bounced off of it. Now you remember, I think it was last week, I said that this market needs to bounce off of that support zone at the upward trend line. Well, it did that. Is it out of trouble yet? Not really, because we still need to break the pullback line, which looks something like that. But we're getting there. If we have another strong week, we'll break the pullback and perhaps continue that trend. I'm not super optimistic, and I'll tell you why. The market went parabolic here and then pulled back to the trend line. I think we're probably destined to go sideways in the near term. I am still worried if we break that, call it 170 level on the GLD, we may see some more weakness. So cautiously optimistic. I think probably we're going to go sideways, maybe a little bit higher than we are now. But the gold names, many of them had pullbacks on profit taking, and they're starting to show some life again. So short-term traders may do well in the gold stocks. We'll take a look at the oil sector next. This is BNO, which is an ETN representative of US Brent oil. And I mean, it doesn't make a whole lot of sense because, of course, Brent is North Sea. But anyway, that's what they call it, the US Brent oil ETN. And it broke out here from this cup and handle pattern. It's moving higher. You can see we're in basically a 7-week upward trend for oil. I think oil could be the story next year. It's starting to show signs that it's gathering upward momentum. And, often the most maligned sectors are the future strong sectors. If the global economy improves after a COVID vaccine, let's say, we may see oil make a resurgence. So although it's early at this point, the early signs are that oil is on a recovery. And finally, the fear chart, you can see that fear is relatively low. Let's take a look at my ratings then. Bullish both time frames for US stocks, Canadian stocks, neutral long term, but bullish short term. Gold, I'm sticking with neutral on both time frames, but we could switch that with a bit of strength. And oil, neutral long term and bullish short term. You know, stocks feel risky here, but there's really no signs of a break of their upward trend. And so the action is stronger in those small cap stocks as retail investors show the willingness to chase those stocks higher. Gold is trying to bounce off of its long-term upward trend line, and oil is building upward momentum. And as I said, fear is relatively low. All right, let's take a look at the day trade of the week. This is just an example of a stock that we traded in the Stockscores active live service. You can learn more about that on the Stockscores website. Go to the analysis section down to active live, and there's a little video that explains what active live trading is all about. But essentially, you're watching my analysis screen through the day, and I have some comments in the opening and closing half an hours, and I also offer some of my picks. So the day trade of the week was one of my picks on Friday morning. I picked it at 9:34 as a stock that had a good potential to move higher. You can see the volume coming in, the action candle. For $100 of risk, our risk management is as follows. It would require a 140 share position. This is a more expensive stock, but it wasn't that capital intensive because $100 of risk required $6,200 of capital. But remember, we can margin that 3-to-1 when day trading. And so you'd only have to put up about $2,075 of capital. It ended the day at 10.5 times risk, which is a 10.5 RR gain, or for every $100 of risk, $1,050 of profit. That represents a 50.6% return on a one-day hold. That's a pretty good trade as far as I can tell. All right, now let's look for some longer-term trades. For that, we use the Stockscores Market Scan. This is a tool where you can scan through the North American markets on the daily time frame, looking for longer-term position trades. So I use this to identify those stocks I might want to hold for weeks or months. Let's jump over to the market scan now. We're going to run the abnormal break scan on the US market. So I go to market scan, and I'm going to select abnormal breaks US. And I'm going to just change my price range. We're going to go for stocks between $1 and $20. Again, those stocks that tend to be smaller cap names, maybe we'll find some better potential here. This tool found 44 candidates. We now have to inspect their charts. So when I see a chart that's trading with abnormal action from low volatility, I can blow it up and take a look at the pattern. This stock made a pretty big break from a pennant pattern. You can see we draw a line across the top, line across the bottoms. We have that breakout with very strong volume. I worry about the reward for risk potential, given that the daily chart was up so much on Friday. So I then want to look at the 3-year weekly chart to get some context. And in that time frame, I see that the stock is going to hit resistance at 220. So that's about a 1 RR gain. If we're buying at $1.40 and our stop is at 70 cents, it's basically about the same amount of upside as we have downside. That's not good enough for me. I want double the upside for the downside. So I'll just keep moving on. And that's the process. I, of course, teach the process in the investor course on stockscores.com. You can learn more about that in the trader training section. And I'm just going to cycle through these. This NYMX looks interesting. We can see the stock broke a downward trend line early in December, and then on Friday broke from a rising bottom. Now my first concern is I don't see really strong volume there. Stock scores are starting to move higher. That's good. Doesn't really have resistance until up here at 450. So let me just take a look at the 3-year time frame just to get some context again. Yeah, and it seems a bit crowded. I would give this a 6 out of 10. That lack of abnormal volume worries me a little bit. 6 out of 10 is still good. It means I think it has a 60% chance of moving higher, but I prefer stocks that have a 70% chance of moving higher. Those are generally the trades that I will take. This GRTS also looks interesting. You can see it breaking from a rising bottom. A little stronger volume. The volume is skewed by this big spike down on the market back in July. Let me take a look at the 3-year on that one. And it's still within the confines of the downward trend. So I would give this a 6 out of 10 as well. This is what I do every day. I just go through looking at charts, looking for good patterns. I can teach you what to look for. This is a stock that I've talked about a few times in Active Live, and I think also in one of these videos. It started its move back in the spring with this abnormal activity back here. You can see the abnormal volume coming in. So that's really when it started at around $1.25. It's now at 4. It's broken out of another sideways range that it has been in for a number of months. Pretty good volume on the weekly. Let's just take a good look again at the daily time frame. And you can see on the daily, it pulled back to its trend line. It bounced off of its trend line on Friday with a little bit of volume coming in. So I think it has pretty good potential. I'd give it a 6.5 out of 10, which again means I think it has a 65% chance of going higher. Well, that's a little bit of the market scan. There's obviously more stocks to look at, but once you are a member of Stockscores, you can look at those and make those calls yourself. Hope that you've enjoyed this week's video. It will be the last of 2020. And so I want to wish you all the very best for the holiday season, a happy new year, and a prosperous 2021. I hope that you've had a great 2020 in the market. It has certainly been a good year for traders, even if it has been a bad year in so many other ways. And hope that you've enjoyed this week's video. If so, click on the like button, subscribe to the channel. I'd like to get to 15,000 subscribers before the end of the year. So we're almost there. So please click on that subscribe button, and we'll see you in 2021. Trade well.